I want to break this out for you because Saylor's been at work. There's also a few more things that are happening within the market around ETFs that still lean into the potential of an ETF approval. We'll break it all for you guys. But before we get started, I want to thank our sponsors, and that is Tangem. If you guys are looking at a self-custody solution and a wallet, and you don't want necessarily to carry a device, but you like the idea of a physical wallet, well, go to the Tangem website. Just go to tangem.com, and you'll be able to, of course, order the card wallet. Now, the way it works is very simple. You can get one of the 3 cards. Let me kind of click on that. You just go hit the Get Tangem. You'll have this option right here, which is a 3-card set or a 2-card set. Get the 3-card set. This works in tandem with the Tangem iOS and or Android app, and it's a very slick solution for managing your self-custody tokens. So if you are looking at trying to hold some stuff on self-custody, go this route. All right, click that link down below. It does help the channel. All right, a couple of points I want to hit on here is this headline right here. MicroStrategy goes back in and buys more Bitcoin ahead of the Bitcoin ETF deadline. I think this only confirms what everybody has already believed, and that is that we are going to get an approval. Saylor, though, the fact that we have seen so much acquisition over the past year and a half, the company shelled out another $615 million for its most recent purchase, meaning it's now spent nearly $1.2 billion. And that's on Bitcoin since November. So pretty significant here. Average price around 31.1. In total, it's spent around 5.9 billion of its 189,000 Bitcoin for its 189,000 Bitcoin. And what's interesting here is Saylor and MicroStrategy now closing in on maybe one of the top positions around Bitcoin as a whole. They also released this on their earnings call. So the fact that they're putting this out on their earnings call, I think, only gives more credence to the potential of what could happen when the ETF arrives. So Bitcoin holdings now with MicroStrategy holding literally at the level of the U.S. government. If you look at this, I didn't realize that the U.S. government had this much Bitcoin, but right now the U.S. government holds around 210,000 Bitcoin. Saylor and MicroStrategy holding around 190,000, so definitely closing in. And remember, this is a continued acquisition that also has mirrored the stock price of MicroStrategy. So that also has kind of a side effect that if you were betting on the ETF but didn't want to get exposed to Bitcoin, this is another play you could make is through the stock. So very interesting things happening right now. Let's get into a little bit of the wrap up on the Kobe Easy letter, which is great. If you guys don't follow this one, go out to, we use it a lot. I find that they have pretty good line on the current macro trends. 72% of stocks in the S&P 500, though, have underperformed in this index. Let me zoom in on that for you guys. This is the highest percentage of S&P 500 components underperforming since 1980. So remember back 1980, one of the highest points of inflation, meaning people were really zeroing in on those top layer stocks. Also, what happened in the dot-com bubble, which was back, and they didn't even break above 70%. So that in itself kind of shows you the time frame we're in right now. So the Magnificent Seven now up 20 times as much as the S&P 493, the other 493 stocks. And the top 10 stocks in the S&P 500 now account for 35% of the entire index. That's a pretty significant situation. This is also something I've talked to many financial analysts who've both been on the show and that I work with and work around. And, you know, small caps are the question mark. That's where a lot of people are looking to 2024 as maybe there's some action within small caps away from what we've seen here with these Magnificent Seven. Again, love to get your feedback if you are going the route of the S&P. So it's definitely an interesting one. Let's go to a clip here from Cathie Wood. She's kind of breaking down another good bullish point of what the SEC's mindset is right now. Listen in.
We believe to the SEC's satisfaction. I think the messaging around the 29th is, look, if you're not going to be ready to go on or around, let's say, January 10th, then do not submit anything more to us because we have too much to do here. And again, that also is encouraging because it feels like a bit of that the SEC is setting a deadline for itself. So that's great.
All right, so she still likes it, but the interesting thing here is the fact that we've been covering Cathie quite a bit here in the last 10 days. Reason being is she's pretty much doing a press tour right now of getting this topic out in the media and getting it to a point where a lot of people are starting to say, okay, maybe I need to start looking at some allocation in 2024. People are starting to plan things. I think this is a good strategy. I want to go to another clip here talking about the ETF and why it cannot be ignored now. Listen in.
If we're right, a spot Bitcoin ETF will be the most liquid way to access exposure to Bitcoin. And I think that liquidity and the ability to move in and out quickly is going to be important to institutions, because some institutions, yes, will be buy and hold. Others will use the ETF really as a way to play a new asset class. And, they'll want exposure at times because the diversification increases risk per unit of, increases return per unit of risk. So I think they can't ignore it. And so this is a very good way to access it.
There's a couple of things that she hits on here that you need to be aware of. And the volatility side of it could be one of them. And she mentions that, this becomes new asset class. It becomes tradable, much like commodities is for most Wall Street types. If Bitcoin is turned into that cyclical model of in, out, the volatility of what we may see around Bitcoin could get real. Now, that could be both positive for long-term holders, because that only creates a lot of liquidity in the markets, which creates a lot of confidence in the markets of people going into it. Again, many of those might go in long-term on a hodl, which of course kind of puts it in a position of growth on a long-term trajectory. So there are benefits to that, but there's also the idea that it is becoming and is now available, will be available on the open market for trade. So quite a bit of stuff happening here. And it's going to be interesting to see how Bitcoin responds, because this is really kind of a new toy for Wall Street to play with. I know you guys maybe not like hearing that, for Bitcoiners out there, I get it, but this is part of the growing up of an asset class. And I think we're watching it happen in real time. Here was Eric Balchunas. He's talking about the whole idea of cash creations and whether or not this would be an issue with the ETFs. Would it make it less attractive? He says no. Since the grantor trusts aren't taxed at the fund level, it kills one problem. And then looking at the 450-ish cash-only ETFs currently on the market, spreads and the discounts pretty much look the same. So point being is that when BlackRock came in and said, okay, we'll adjust to these cash creation requirements from the SEC, and if you don't know what that is, go out, do some research on that. It really is just a different structure financially to manage the ETF itself. But the fact that they did that, they succumbed to the SEC's requirements, which a lot of the other filers had already done. I think it just showcases that, okay, yeah, this is fine. It's well accepted within the industry. No problems here, so for sure. So, by the way, if you guys are not subscribed to the channel already, make sure and get in. This is one of the best, I think one of the best places for you guys to grab alpha, but also get educated on what's going to be happening next year in 2024, which I still believe is going to be the biggest year in crypto yet. 2024, a lot of people still looking at 25 as possibly being a breakout. We could have consecutive years here, but I'm looking at all of the things happening at a very interesting time, and it's all timed with what's happening in the markets such as Bitcoin, altcoins, what we'll see in Web3, and you tie that to not only financial but also political scenarios. This is a big year. So make sure and subscribe to the channel. We're trying to get to the 400K. As you can see, we're almost there. All we need is a little help from you. All right, a couple of things I want to hit on here, and that is back to the Bitcoiners, as they like to be called, and that's Max Keiser. He's basically criticizing Cathie Wood's endorsement of the spot ETF, among many other people. I mean, I would think you'd almost have to criticize, Michael Saylor at the same time, because he's betting on that. But I think the point is that what Keiser, and I can understand it, because if you listen to a lot of Bitcoiners, which I do, they're very, protective of Bitcoin. But I think with any, like I said earlier, with any asset class that gets to a maturity level, the whole world has to participate, including Wall Street, the bankers, and the rest of the economy, for it to really make its way to the next level. So he's just, I think, in a phase. It's a process of, you have to accept this. It's where Bitcoin is going to be going in the future. Some points that he did make within the article: proxy instrument versus actual Bitcoin. I'm in the position of, I don't care how big people get to it. I think it's good for Bitcoin in general. Government and Wall Street coordination, that is something I think is already happening, you know, in the sense of, I won't call it market manipulation, but definitely market massaging. I think that's been happening in financial markets for as long as we can imagine. And if you go back to our video the other day, I was showing just the scenario that played out when when BlackRock and Coinbase had initiated their partnerships. And if you looked at where timing was, there was just a lot of interesting things that played out for BlackRock to possibly even enter the market. Investor rights and true ownership. Okay, I do agree. Not your keys, not your coin. That is something that I don't like. But the point is real, and that is that there's going to be a lot of people, whether they're financial instrument and institutional capital, or if they're individual retail investors, that may never want to take custody. And that's just going to be a reality that we and others will start to realize, that there's going to be a lot of people that will not go that direction. And then as last is, of course, government control. ETFs, I think, are very benign. Now, could they be and ever get to that level? They would have to be massive. Think about gold and how far that has come. The gold ETFs have never been infused with government control. And I don't think that we're really dealing with that. Now, I get that Bitcoiners kind of fall into that, you know, conspiracy theory sometimes, and rightly so. There's been enough of that worldwide in terms of the financial system. But I think this only fosters the overall. Remember, Bitcoin is not managed and run by the United States. It's a global currency or a store of value, whatever you might call it. So I don't think this is a bad thing. And I do think that eventually some of the Bitcoiners will come to agree that this is, you know, it's going to be good. It's just another, you know, notch in the belt of Bitcoin overall. All right, so go to a couple tweets here. This is Eric Balchunas. And he basically states a couple of things here, is that Grayscale is surrendering their cash-only creations. That was a big holdout. Let me kind of zoom in on that because you can kind of see the exchange between him and Jeff Safert. The scenario that, remember, we just reported Barry Silbert, DCG, Digital Currency Group, stepping down, also with their additional president stepping down. Those are moves that, with this happening right on the heels of that, kind of make you think that they're in a position, meaning Grayscale is in a position where they're trying to do anything they can to get this thing followed through. Now, there could be two ways that that would play. One, yes, let's just catch up with the rest of the herd here in terms of approvals, or it could be a prep for maybe angry investors if, you know, things don't work out the way they were anticipated. So there are a couple of plays here that are in kind of in the situation right now. One, the removal of major executives, and two, moving over to the cash creation. So I think all of these are very strategic. Overall. What does it mean? It doesn't really mean a lot other than who's going to win the ETF race, because I think that's the marketing ploy. BlackRock, Fidelity, Van Eck, 21 Shares. There's just so many opportunities here, but it's going to open it all up. I think this is a good situation for everyone. Meta Lawman came back in. By the way, he's back on Twitter, which is good. He hits on a couple of things here. Assuming the SEC approves of Bitcoin ETFs before Gen 10, just remember that this is not evidence that the SEC is coming to their senses. There's still an issue that this really occurred because of the circuit court finding the denial of the Grayscale ETF was, hey, you can't do this. So that only bolstered the opportunity, I think, for a lot of the already filers that were out there that had now legal positions to go. So it definitely does just create more strength around the overall strategy of what these financial institutions are doing. I want to jump over to another clip here from Cathie Wood, and this is just kind of touching on Sol for a moment, because Cathie has been a big ETH fan and also a big Bitcoin fan to a certain extent, but I'm finding that she's starting to mention Solana a little bit more. Now listen in.
To have watched Solana after last year's controversy with FTX being such a big supporter of Solana, and to watch the developers stick with Solana is speaks volumes to us. I always say follow the developers, and they certainly stuck with Solana, and they are also scaling in terms of Ethereum as well. So we think those are two powerful networks in the decentralized finance space. And we also think that this notion of DeFi, decentralized finance, that, you know, if people just start looking at it and thinking about it as simply the internet financial system. The internet in the early days was never conceived of as hosting commerce or financial services. And so developers back then didn't build in that capability. All that's happening now with Bitcoin and Ethereum and Solana is developers are building in native currencies and much more streamlined, fewer intermediaries, streamlined ways of dealing in the financial system.
All right, so she said some very interesting things here. First of all, she used Bitcoin, Ethereum, and Solana in one frame. So that gives me some indicators of where her head is around what the future. Because remember, a lot of ARK's investments is all about innovative products, services, etc. For Solana to be pulled into that conversation, that's a big step in less than a year for Cathie Wood, ARK, and I think some of the more advanced, you know, traders in Wall Street that are starting to look at these things. If you look at Solana in general, just in general of their achievements this year, this is kind of the 2023 wrap up, but a lot happened here. You had, of course, the Bonk airdrop, which I think pretty much set the saga into play. Solana saga gets sold out. You know, Helium Network launches. Everybody knows what that means. And that's going to scale in a big way because of what's happening just with the way you can earn rewards within Helium Mobile. If you don't know about that, go back and watch our videos on that. That's a big deal. The other thing is the DeFi moment, and she mentioned this. Let me kind of zoom in on that right there. She mentioned the issue of DeFi and that this is the next finance scenario for Web3, the internet. And when you look at the DeFi component, especially in swaps and things of that nature, and what's going to make that architecture work, you have to lean in on what's going on within the Phantom wallet. We showed this the other day on a video, and this was the Uniswap airdrop and the period of time that it occurred. This was Ethereum right here in the 28 to 2021 run. And Uniswap jumps in. Now, what did this do? It opened up flexibility and access in a time in which Ethereum was really, I think, the #1 player in terms of alternative finance, DeFi. And this, of course, paid off for Ethereum in a big way. We saw it run to its top. Now, if you look at what's happening with Jupiter, is Jupiter the DEX that could set the tone for Solana's run? Because remember, it's access and the ability to access liquidity in all of these ecosystems. So that's why you look at these kind of situations as they start to apply. And now you kind of see where the whole market is going. Hopefully this gives you guys a little bit of insights to it. Hopefully you're doing your own research on all these kind of scenarios that are playing out right now, because it is getting ready to take off. Again, like I said, I think 2024 is the year for crypto and a lot of these alternative assets. So make sure and check it out. Make sure and subscribe to the show. As I said, we're trying to hit that 400K mark. And if you're not in our Diamond Circle, just join. We'll leave a link down below if you guys want to catch me on X. It's at Paul Barron. We'll catch you next time right here on TechPath.